I believe that the wave of spot demand will dwarf the capacity of the Bitcoin futures market at this point. I have a logic for where I think the price is going to go and why I think it's going to go there. And I certainly think that the spot ETF is going to impact this. But the primary reason for the movement in the price is the halving cycle.
In a recent interview with Kitco News, Mark Yusko, the CEO, founder, and chief investment officer of Morgan Creek Capital Management, delved into the subject of a potential approval for a spot Bitcoin ETF by the SEC. During the discussion, he also touched on Bitcoin's present fair value, the significance of the 2024 halving, and his projections for Bitcoin prices around midsummer 2024. Roughly every 4 years, the Bitcoin rewards the miners receive for successfully mining a block are cut in half to control the blockchain supply economics. This event is known as the halving and is often seen as a positive catalyst for the price of the digital currency as it reduces inflationary pressure on Bitcoin. The first halving happened on November 28, 2012, reducing the block reward from 50 Bitcoin to 25 Bitcoin. The second occurred on July 9, 2016, further cutting it down to 12.5 Bitcoin. Most recently, on May 11, 2020, the reward became 6.25 Bitcoin. The next halving will be around April of 2024, followed by one in 2028. History suggests that a significant surge follows the halving of BTC prices. Yusko's bullish prediction hinges on using previous historical examples of how the price of Bitcoin behaved after each halving event. He said every halving we've added a zero, and by next April I think we could go to $100,000. Adam Back, Blockstream CEO, is positive that Bitcoin is going to beat its all-time high and rise to $100,000. A research report published by Standard Chartered recently revised its 2024 year-end Bitcoin price prediction to $120,000 from the $100,000 predicted in April. Let's direct our attention to the video. But before we do, please ensure you've subscribed to the channel and activated the notification bell for future updates.
My point on Bitcoin is the halving, it guarantees movement. And why is movement important? Well, and what do I mean by that? Meaning, I'm a miner. If I were a miner, I bought a bunch of machines, I put them in the room, I plugged them in, and I rent that computing power to the network, to the Bitcoin network, and I get paid block rewards. Block rewards are the payment that I receive for providing compute. And my costs are fixed, my electricity is fixed, my machines are fixed. If suddenly, which is in code every 4 years, my rewards get cut in half, I'm out of business, unless the price rises. So what has happened in every halving so far, the price adjusts to make the miners whole. That makes sense. Well, yeah. If the price doubles, right, because the price, the block rewards fall in half, so the price has to double. Well, if your price doubles, what does that do? Well, that attracts speculation. And if speculators come in and then leverage comes in, the price will go from a linear increase to a parabolic increase. And we've seen that every single time. So I can look at what the fair value is of Bitcoin using a Metcalfe's law model. And Tim Peterson has the best one, and I just use his. And it would have told me that in 2017, the fair value was $10,000. So when it hit $20,000, it was destined to go down. And it did, all the way to $3,000 because people got overly pessimistic. And then it rallied, and I could see that the fair value in 2020 was $30,000. But we went to $69,000. So it was going to go down. So I believe fair value today is $55K using that Metcalfe's law model. I believe that every halving 10x's the total value of the network, and that's just because the number of people and the way Metcalfe's law works, and there's an exponential growth factor. And so we started with 1,000, then we went to 10,000, then we went to 100. So I think this halving goes to 100,000 will be the fair value. So fair value will accrete from 555K today to, by the halving next April, May, call it June. So let's call it middle of summer next year. $100,000 will be fair value. But we won't go to 100,000 we will get to 100,000, and then we'll have speculation. Now, how much speculation? Depends on the approval and the timing of the approval and where we are in the adoption cycle and how much of that 300 billion is coming in. It depends on the amount of leverage that allows people to increase their buying power. And I think the leverage will be lower this time. And so let's say we blow through that 100K and we're at 150K. That seems reasonable to me. So somewhere between 100 and 150K.
By middle of 2024, after the halving in April.
That seems like a rational response to the halving and to the potential increase in demand from a from a spot ETF.
In recent weeks, BlackRock, Wisdom Tree, Invesco, and Fidelity Investments applied for a Bitcoin spot ETF. So far, the SEC has rejected the applications, but observers expect eventual acceptance. Yusko's comparison between the gold ETF's 3-year approval process, influenced by entities like JP Morgan, prompts questions about parallels in the Bitcoin ETF approval journey, suggesting similar dynamics might be at play. In 2020, JP Morgan paid $920 million due to its involvement in schemes aimed at defrauding precious metals and U.S. Treasuries markets. According to a Bloomberg ETF analyst, the United States could make up for 99.5% of the global trading volume for crypto-related exchange-traded funds, but only if spot Bitcoin ETFs are approved.
Now, history doesn't repeat, but it rhymes. And it wasn't an ETF, but it was GBTC, the trust. So in the last period, 2017-18, GBTC kind of came into existence. And we saw the price go from 10,000 to 60,000 when fair value was more like 20,000. And that was a crazy move, but it was, again, supply and demand. And then it fell, and then it, rebounded back up all the way back to 69 before the bear market, which coincided, by the way, with the approval of the futures-based ETF, which I will argue was absolutely intentional, to depress the price ahead of the forecast approval of the spot ETF. Look, here's the thing. Remember the gold ETF? The gold ETF sat waiting for approval for 3 years. Now, why did it take 3 years to approve? It's a great product. Lots of people use it around the world. Why did it take so long to get approved? Well, some would say because JP Morgan didn't want it to be approved. And if JP Morgan doesn't want it to be approved, it's not going to be approved. And so why didn't JP Morgan want it to be approved? Well, and this is not speculation. I'm not making an accusation of anything that hasn't been, documented. And they pled guilty. Actually, they didn't say guilt. They paid a fine without admitting guilt last year for almost $1 billion for spoofing the gold market.
Yeah.
That's fact. That's not fiction. That's not slander. That's just fact. So they are short a whole lot of gold. And once they got short the amount of gold they wanted to be short, they're like, hey, we need someone on the other side. So fine, you can have a gold ETF because they'll be the long to our short. Good, works. I think same thing happened here. There was all this rhetoric about the market's too volatile and too unregulated and too easy to be manipulated. Are you kidding me? How about these triple leveraged VIX ETFs that have lost 99.99999% because they're just silly? They're stupid. They're totally manipulated. They're totally bad for clients. And the SEC let those get approved day and night because they're very profitable for the companies that issue them. That said, there was all this rhetoric that we can't have a Bitcoin spot ETF. Oh, but we can have a futures ETF. Well, what does a futures ETF allow you to do? It allows you to create paper assets. And anytime there's an imbalance of paper assets to physical assets, think oil, think natural gas, think wheat, think anything, you can get these big spikes and big crashes. And that's exactly what happened. So people were able, $1 billion flowed into the futures ETF. Well, for every long, there has to be a short. Well, who would be writing those naked shorts? maybe the same institutions that now are going to get approved to go long at a lower price. Magic.
Being the world's largest cryptocurrency, any fluctuation in the price of Bitcoin impacts the market as a whole. Bitcoin halving is predicted to initiate a bull season in the crypto market toward the end of this year. Although the market has been recovering since January, with most cryptocurrencies attempting to reverse the losses made over the last 2 years, a strong upward momentum has yet to unfold. What do you think Bitcoin's future holds? Do share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for joining us.